Hello everyone, welcome to another update video. So we're going to go over gold and US30 today before GDP. So we've got GDP in just over an hour's time from now. So we're going to start with gold and just go over what we're seeing on the chart. So we need this chart here. Hopefully you're watching this before the news release. So what you're seeing here is a consolidation. The consolidation is leaving behind liquidity above, so you're looking to target that on the higher time frame. This is on the 4 hour. You can see here we have a manipulation area running along. Yesterday that was retested with this downwards move, took liquidity from this doji candle here and then continued up. So it's clearly showing bullish strength. So today what we'll be looking for, especially with GDP, is a retracement, and then that will be the main target. You're looking to target the all-time high. First, it would be yesterday's daily high, and then the all-time high, which is just a little bit higher. But you expect to take both of those. The reason for that is because if you go to the left, you can see this upwards move is your fake out. Here's your consolidation. Then you got a downwards move, played around with the manipulation area a bit, dropped through, took liquidity here, retested bullish support. Nice impulse move from there. So that's showing bullish strength. Price comes up, plays around with this manipulation area again, takes liquidity from here, stays within this consolidation structure, and gives you a downwards move once again. Retest that manipulation area, come back up again. It takes liquidity, internal liquidity here, and leaves this major liquidity here, because everyone knows all-time high, that would be the main target. So now you have main target here and then a secondary target here. Price comes down once again into that manipulation area, which is now a bullish support. You take liquidity from here, nice wicks off that support area, and then continue buying. That's why you got that smaller time frame consolidation at that level yesterday. That's why you got that. That is very clear liquidity above there. So this is a reversal structure, and this is clear liquidity to indicate a continuation up. If you go to the 30-minute time frame, that might show you a bit better. So here you go. Here's your liquidity. That's the main liquidity that was targeted. This is your bullish support. The grey area is your higher time frame manipulation area. So what that means is, in this area you expect a lot of fake outs and liquidity grabs to be taken. You don't expect it to stay within. This is a liquidity grab, this one, which is a higher time frame doji candle. Then you got the impulse move up, retracement, to accumulate buy positions, and then a continuation up. This creates a new breaker area. So here I have a manipulation area here now, and that is the same level as we had a few days ago. So the last video I did was explaining this manipulation area here, and you was looking for support to go up from there. Now you have it over here, which has been used to fake the downwards move, and now you have an impulse move. So if we get a retracement to this area, I expect that to hold up as the breaker. So you expect bullish support from this grey area here. You have clear liquidity there to indicate that there may be a downwards move in the form of a trend, and you're currently waiting for the GDP release. So I wouldn't be surprised if we got a downwards move with the GDP release, followed by a continuation up going through the New York session. That's what I'm hoping for. That will be my setup. Now if this continues up and takes the all-time high with the GDP release, then I will be looking for a reversal to go down, because it's at an all-time high level, so there's no more real targets to the upside. So I'd be looking for a downwards move to give a retest of some level at least. It all depends on what happens in the right order. So the scenarios may change. This is what I'm hoping for. This would be the easiest outcome. But if we take the highs first, then I'll be looking for a bearish move first. A bearish move, and being cautious because it is a bullish market structure. So that's what I am currently doing on gold. That's what I'm looking for. That will be for GDP tomorrow. And then we have some more news tomorrow. I think there's PPI news tomorrow. Then we go over that again. Now look at US30. Let's have a explain of this. So go to US30. This is the higher time frame analysis. So we've had some good trades of this week. So what we have here is the high time frame. This is a high time frame chart. Just keep it nice and simple. So far this week, we took the all-time high here. You just took it a bit on this first candle here. I think that was on Monday. Then you consolidated a bit, got some moves in there. Then we got the downwards move here, which retested this manipulation area from the couple of weeks ago. You can see we've got good rejection off there, nice impulse move to the upside, and it don't seem to be slowing down. So all you'd be looking for today is a continuation up on US30 to target the all-time highs here. And they are previous day high and then the all-time high which was made on Monday. So that's all you look at on the higher time frame on US30. It is clearly bullish and showing bullish signs. So then you go to the smaller time frame. So this is all following a simple strategy that we follow. So that we have a look at the smaller time frame. Stick to the 15-minute time frame. So you have a clear buy signal from the London opening this morning. A few traders got that. I stayed out of it. I saved myself for the GDP and New York opening on this day. Now we have a collection. I did post about the past GDP levels. That will help you with trading US30 today. And hopefully with watching this video, it will give you more insight on what to happen. So we have trade templates to follow at key times. They are GDP timing and the New York opening. That is when you will find the best setup, which is likely to continue into the afternoon. Now looking at the higher time frame, we have a clear bias to get into a buy to target the all-time high and previous day high, which is there. Now what would be expected is a retracement of some sort. Wouldn't even be surprised if GDP pushed down, retested this area, and then the New York opening continued up. That would be the easiest scenario for me. This is your breaker. Obviously, New York traders were buying from here yesterday. So if New York traders want to continue to get into the move and they are not happy with the high price, then they will push price down, start buying around here, and then continue to buy. As long as they keep the price to the upside, the New York traders, the London traders will be happy because they are all targeting the new all-time high. And that is the main aim of today, is to target the all-time high and the previous day high here. Over the last few days, we've got this downwards move here, nice downwards move, followed by this one in the London opening, nice downwards move here. I took a day off yesterday, but these were clear setups, that analysis that was sent out. You can see we've got a rejection with the New York opening off that blue line here, pushed up. These were your main targets. Then you were looking for a downwards move to show a continuation, and that's what you got. This pushed up to a premium sell area, then they continued selling, and that's why you got that big downwards move. So scenario on US30 today, as you can see, it's pushing up at the moment. I wouldn't be surprised if we took these highs first. So it's the same as gold. If we're pushing up to these previous highs, these are liquidity pools. So I'd be looking for a bearish move, which would be a retracement back down to this area, and that will be my main aim today. I will be looking for bullish support, just like we got here with the London opening, off the GDP release level and the New York opening level, and that will show me bullish strength. So what you'd be expecting is some sort of retracement if these highs are taken, and then a continuation up. But the highest probability move would be the downwards move, because you've taken liquidity pools, and then you'd be focusing on a retest. So a bearish move would be the highest probability move. So you'd be looking to favour that over a continuation up after a retracement took place. Now, if we leave these, if price says, okay, we're turning now, and price comes down to here, it'd be the scenario that I said about earlier, which is the retracement followed by the continuation up. Hopefully all that helps. I've explained that in short enough time as I could. Have a good day. Hopefully it brings you some profit. Let me know if you are successful at all and this information helps.